Good morning, everyone. Welcome back. Let's see what kind of activity we had over the night, since the open yesterday and overnight, heading into this morning. Actually, before that, let's jump into our calendar. Let's start there. All right, so we did have some news this morning at 8:30. Medium impact news today. No high impact news today. That will start tomorrow at 10. We have consumer confidence, CB consumer confidence. No high impact news on Wednesday. We do have FOMC members speaking, but that's about it. Preliminary GDP quarter over quarter and unemployment claims come in at 8:30 on Thursday, and then core PCE price index 8 a.m. 8:30 a.m. on Friday, and that's going to be our high impact news for the week. Several medium impacts on each day, but those are the high ones. So Tuesday, Thursday, Friday this week. If we jump over and take a look at our earnings for the week, let's see if there's anything big to note. Yeah, see Nvidia here after the close on Wednesday. None of these other companies stand out to me. I don't know if you guys have an opinion. So we see the Dow is continuing to be the strongest of the three indices here. We had on Friday. I'm not sure if anyone who was on the Friday session remember me saying that we had taken the previous day high. So the Thursday high was taken on Friday, and now we have the Friday high taken during after hours and this morning. Actually, during the news event this morning, the 8:30 news event. And now if we look over at the S&P, S&P hasn't quite taken the Thursday high, but it has overtaken all the activity we had on Friday, and it's getting really, really close. It's this line up here, 56.65, and we're now trading at 56.62. So it's super close. Maybe the 9:30 open will take S&P over the Thursday high. Now, if you look at the Thursday high on Nasdaq, the Thursday high is up at 20,000, so we're pretty far away, about 250 handles from the Thursday high. As far as the Friday high is concerned, that's at 19,903, so 125 handles from there. So Nasdaq is currently the weaker of the three, and it's not taking the Friday or the Thursday high. We look over at the dollar. Dollar was pushing heavily Friday, closing near the yearly low. Matter of fact, it might actually be the yearly low. Let's go to the weeks. Yep, December of 2023, it actually closed below that. December 2023 was 100.6. Sorry, it didn't close, but it did put a wick below the yearly low. So the dollar put in a yearly low this morning. And now we're starting to see a slight retrace. So we'll see how long that lives, whether it pops into this fair value gap and starts to push lower, or whether it finds one of the ones above and then pushes lower from there. But that's what we have as far as the three indices and the dollar. That's our calendar. That's also our earnings forecast for the week. throw in that new week opening gap since we're still so early in the week. I just want to see how it's trading. And so far, it looks like we are using that new week opening gap as sort of a equilibrium point where we keep trading above and below it, above and below. Hopefully that doesn't signal a seek and destroy day, but we'll see. All right, we got 4 minutes before the opening bell. Let's see who we have in the room. M. Muhammad, DB, Eddie, Biblical, Ketty, and Robin. Good morning to you all. What's up? Hope you all noticed I did put some effort into the mic this weekend. I think I'm pretty close. I'm almost there. But let me know how it sounds. I appreciate it, Em. Just give me 1 second. Oh, I know what those lines I erased were. This was, I think this was the draw on liquidity on Friday. On Friday, as we were getting off. 800 is where I thought price was going, and it ended up going there twice. After we got off, I remember it hit, and I was like, okay, so it actually went where I thought it was going to go. because I believe we got off somewhere around right at the end of the macro, so right around 315. So in this candle here, one of these two, and it actually did run up to the 800. I thought it would. It retraced back down in the final macro at 350, ran it back up to 800 once again, and then it just kind of settled until the final bell. Okay, so that's what I remember that now. Hopefully, one of you, any of you who were still trading Friday afternoon after I got off, hopefully you were able to capture that. Now let's look and see where we are this morning. All right, so we are into the opening bell for a minute so far, and look like right before the opening bell, we pushed out of the new week opening gap, which also has around consequent encroachment there, the 8:30 open. 931, 932. Taps in for a push out of about 40, 45 handles there. We're back at the new week opening gap, traded right above it. Hit a hourly fair value gap, push back below. See how this wants to trade. And get back up to the 5 minute, see if I can't find it. And breaker on the 5 minute as well. Oh, okay, Dorsey, what's up? Captain, appreciate you, Captain. Thanks. I've been struggling with this for several weeks now. I'm glad that it started to sound a little bit better. Hopefully, we're back close to normal. I'll keep playing around with it in hopes of getting it, improving it even more. Hey, Vikas, good morning. No. So when you log into Tradovate on TradingView, then you should have the live data. So the only time that you'll need to pay for it on your own is if you want to just trade your own funds, or if you want to trade like in a demo account. So the paper trading account, if you want to use that, you're not logged into Tradovate, so you're not getting the data at that time. Yes. Yeah, then just link in. Yep. So take your Apex account, your Tradovate credentials, and then log into Tradovate through TradingView down at the trading panel. You bought the Apex challenge. Okay. Yeah, once you get everything set up and you log in through TradingView, you should have the live data. Because that's really the only way that you can trade Apex is by having the live data. No, 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 because you do not need to buy the CME pack. on TradingView. You only need that if you do not want to trade your Apex account. So if you want to trade paper trading, the demo account through TradingView, or if you have your own funds, then you need to do it. But otherwise, Apex has paid that for you, or it's part of your monthly fee that you pay for your challenge. So until you pass, you have to pay Apex a monthly fee, and it's part of that. So good luck on your combine. All right, it's found its way back into the bullish breaker here on the 5-minute. If this new week opening gap becomes a sort of a price ceiling for the time being, we do have the fair value gaps above us, which has pushed price down once, twice. And remember, of the three indices, Nasdaq is the weaker of the three. In fact, let's pull this 30-second one back over and see if that one has any price relevancy this morning. Okay, so that 9:30 open did allow S&P to take over the Thursday and yesterday's high. Oh, I'm sorry, Friday. Thursday and Friday's high for S&P. So we do have SMT, where Dow and S&P 500 have both taken over the previous 2 days high, and we have not done it. It's that fact we're seeking lower prices at the moment. Therefore, if you have a daily bullish bias, it might be better for you to take a trade in S&P versus in Nasdaq. If you have a bearish bias, then I would look to Nasdaq to trade. Did we flip market structure here? So market structure was flipped here on Friday and never really regained. So we are a bearish market structure at the moment here on the 5 minute. Let's go to the 15, see if we have the same there. So 15. And on the hourly, even on 4 hours as well. All right, so we currently have bearish market structure all the way up through the 4 hour. Bullish on the daily. No, Vikas, you should be good. Sorry, I didn't see your comment. You should be good on the free version of TradingView. The only thing the premium version is going to give you access to is to have like more indicators on your screen or to save more chart layouts, that kind of thing. Um, but as far as just being able to trade live data, you have that through your Apex account, and you should be able to trade that fine with just a free account. You just are limited to, I believe, 3, maybe 4 indicators. Hey, Vivian, good morning. So on the 5-minute, price is traded all the way down to the bottom end of the manipulation leg of this 5-minute breaker. So we'll see if we get a closure below this daily breaker line that I have for the daily at 717. If we get a closure below there on the 5-minute, then that will invalidate our bullish breaker here. If we get a trade back into the range and above and close above, we'll reconfirm it. We lost the level now. Again, we're looking to see if we close there or above. Oh, look how nice price was to us. Oh, God, we were in the macro here. pushing higher while we're watching Nasdaq push lower. So we have the opposite thing going on there. And S&P is kind of in the middle. It's a little bit neutral between the other two. And we still have a bullish dollar at the moment. When you're doing a 50K account, I mean, it really depends on your strike rate, right? What's your win percentage? I trade minis. I don't trade micros. I've thought about it multiple times. I just have never made that conversion over to trade micros. But many, and I mean many subscribers here do trade micros. So it's going to have to be something that you decide to do on your own. It's based on your risk parameter. But do keep in mind that if you start off with a losing streak, your combine could be over after 4 or 5 trades, depending on how much you risk per trade. And I think I've mentioned before, I generally will risk somewhere between 20 and 25 handles on a trade. So that could be like $500. That might be a bit too much for you. So you may want to look into micros. But my own personal trading habit, I trade minis, and I usually risk about $400 to $500 per contract. And that's generally when I'm looking for a target of 25 handles of a TP. If I'm looking for less, like if I'm just scalping and trying to get 15 handles or so, obviously I'll risk much less. I won't risk 25 handles to get 15. Generally, those are one-to-one trades, so I'll risk 15 to get 15. That's both. I have 250K accounts and I have 50K accounts. I still risk $500 per trade. And it's not even 500 per trade, it's 500 per contract. So on a 50K account, I only do one contract. But on my other accounts that are a little larger, I a lot of times will go in on a trade for 3 contracts. Mohammed, sometimes, yeah, it happens. Right, so we better break to the downside here. Yep, so we just took the New York low out, which was here. This was the New York low based on the kill zone. And I'll go ahead and mark up that high. In fact, let me just do all the session highs and lows. London low has been traded through. Let's see. New York low traded through. All right, yeah, so Monday I usually have to do the Asia high and low manually because for whatever reason it still takes the Asia high and low this on this indicator from Friday. Let's see. So this would have been Asia low already traded to and through midnight. So this was the Asia high already traded through. All right, so we're good. Because I don't use a set stop loss. I said it usually, my stop loss is usually between 20 and 25 handles. So that would be 25 handles would be 500, but if it's only 20, then it's a $400 stop loss. It just depends. I make it where it's not larger than 25. And you're right, you do have different size breakers. And I know we've covered this before. I'll go over it again. But if you have a breaker that's too large, or you, I'll give you an example. So if I can only take 25 handles as a stop loss, and this is a trade I'm trying to enter on a retest of a breaker, and I see this breaker's at 700 and the lower edge is at 668, so this is 32 handles. And if I only want to take 25 and I figure out where I want my stop to be, and if I want my stop to be here, right? So if I can only take 25 handles, this is still inside of the breaker. So what I need to do is I need to take this and I need to move this down to where I can handle it, where I want my stop to be. And so that means I can only take a breaker entry on this breaker at consequent encroachment. I can't take an entry up here because I can't afford to take on the drawdown. So I have to wait for price to trade back down to 684, and I need to take an entry in the middle part because the breaker is too big. So that's how you, and this is what I told you to do during your backtesting session, is to go through, look at all the setups that you like, look at where you would have needed to place your stop to be successful in that trade, look at, understand what your threshold is for risk, so you know what you can absorb, and then your entry has to be based on those parameters. It can't just be, oh, well, this setup says you have to enter here. Well, your risk parameters won't allow you to enter there, so you have to enter at a different location. Uh, oh, sorry, I didn't realize it wasn't showing the prices. Okay, give me 1 second. All right, biblical. That should be good now. We've now finished our macro, and so we've broken down back into the daily breaker, broken down from the lows we had from this morning, and we're back into the range that we were experiencing during the lunch on Friday. Let me go ahead and shift this out to the back end of the hour. So price is doing exactly where I thought it would do early this week. I thought we would seek lower prices. See if I can't. Yeah, so here we are on the daily. This was Friday's candle here. Traded about halfway through the range of Thursday's downward momentum, and now we're pushing lower again. I felt like we would push lower and get close down to where this fair value gap here is, right here. And that starts at around 19,450. So about 200 handles down. And that's if we go that low. We don't necessarily have to go that low, but I think price wants to get there. That's also around consequent encroachment of the breaker. So we did have the breaker confirmed last Monday. Finally traded back into it on Thursday. Looked like we wanted to push out on Friday. Now we're back inside of the daily breaker once again. So now if we go down and start checking out the 4 hour. So we did have back-to-back fair value gaps here that was traded into on Thursday. Now, if we lose this low, so if we lose the 550 level, then these are the fair value gaps on the 4 hour we'll trade into, and those are the same ones that align with this fair value gap on the daily. So that's what I'm expecting us to trade into and then trade out of. On the 1 hour, so we have all these fair value gaps below us on the hourly. That's it. So if we go back, sorry, let's just take a quick peek here at the comparison chart. So we are seeing that so far in the first 15 minutes of this hour, we did hit a bearish fair value gap on the dollar, and now we're pushing lower. So that's kind of what I wanted to see before we get higher prices on the indices. We definitely want to see lower prices on the dollar. So the dollar is going to have to confirm that it wants to move lower, not just the first 15 minutes of the hour. So when we get to the back half of this hour into the end, we'll see if we still have a bearish candle here or if it is reverse field and it's back up into the fair value gap. But we can see that the last hour was quite bullish on the Dow. So far this hour, it hasn't really made up its mind, but we are bearish on both the Nasdaq and the S&P. Heavily on the Nasdaq, but pretty bearish as well on the S&P. And so since we broke this daily breaker level, we're already 100 handles down. our opening range high. We'll have an opening range low in just a moment. Let's see. Just drop this in now. If it changes in the next 3 minutes, I'll update. Oh, Triple C, what's up? Triple C, I did not take that trade. No, I have not traded this morning. Mm. Okay, beautiful. Oh, I see. Okay. Appreciate you, beautiful. The break of the daily. It could be. It could be. Let me just take a look. All right. So you say the break of the daily. For daily what? Not sure what you're looking at. Are you saying the break of this breaker block, the daily breaker block? Is that what you're talking about? Yep. Okay. No, that would not be a good time to take a trade based on this. And well, before I continue, are you talking about a long or a short? Okay, short. No, that would not be a good time to take one. Mainly because this is a bullish breaker. So you expect that when it trades into this area, that it has a bullish momentum out. But before that, first you have to understand what this area actually is. So I put this bar here just for me because I know what the area is. So this is just kind of like an indicator to say, okay, we just entered in that area. But let me just bounce over and I'll show you what that looks like. See, this is on the daily, and this is that breaker block right here, the big blue area. But if you can tell, it starts at 713. 19,713 and it ends at 18,867. So this breaker block is like 850 handles or something crazy. So it's a massive area. So it's not necessarily an entry position, but it is a area that lets me know we should be getting bullish somewhere in here. And so like on Friday, or I'm sorry, Thursday, it traded in, and it traded in about 200 handles, and then had a big push out. So now we're back in. But no, this wouldn't be an entry place. It would only be a place where you understand where you are, and then you would have to go down to lower time frames to then look at. Triple C, sorry about that. I think I may have lost you in the middle of that explanation. I looked down and saw the connection wasn't that strong, but let me know if I lost you here. Yeah, okay, Dorsey. Something happened with my internet feed. I looked down and saw that the signal wasn't that strong, but it should be back up now. Okay, excellent. For my coffee cups, so just give me a couple minutes. Levels have been traded through. All right, so the opening range low, we did get a trade through, and that's today's opening range. So we are now confident in shorts. Lunch low must have been from Friday. London low, opening range low, all of that. Okay, so these are Mondays. So now we're back down to the 9th, August the 19th, so about a week ago. Give me a second because yep, because your analysis is correct. We are bearish today. I'm not much of a fair value gap trader, just in general. But yeah, if you want to take a trade at 731, you're in the right area. It doesn't fit my trading style, but yeah, you're in the right area there. And that's also the optimal trade entry on any type of retracement. That'll be just past 62%. 62% is around 19,715 or so. It's right at 62% retracement. So 71% retracement is close to 745. So in between 715 and 745, it's going to kind of be that sweet spot. And you said 731. So yeah, you're right in that range of any retracement hitting hitting the level it was looking for and then continuing lower. So I just grabbed the Fibonacci and just measured out this area right here. Oops, sorry. So 731 is also an optimal trade entry of this leg, but I had actually taken the whole leg. So therefore, when you said 731, so it's like halfway in between the 71% and the 62%. So it's right in there, right in this little spot. Hey, Pauletta. Oh, you took the last leg down. Oh, excellent. Met your daily target. Sweet. Yeah, because you can take you're gonna look for a price anywhere between where we are now and that opening range high, which I think is 801 or 802 and a quarter, whatever that is. It's high. Yep, 801, 801 and a half. So that's the one. So anywhere between here and there is what you're going to be looking for. So yes, we do have this fair value gap in this area, and then you mentioned the one that's right here. Keep in mind the one up here. This is on the hourly. But let's see if there's a 15-minute one here as well. Okay, there is. You got this one right here, which is right at the 8:30 open. So 780. All right, so the S&P 500 is now taking out the. Let's see looking to see which low it's taken out so far. So all they did is take out its daily low, so the low of today, but the low from Friday has not taken yet, and neither has it taken the low from Thursday. However, Nasdaq, we've already taken out the low from Thursday. We've taken out the low from Monday as well. Yep. So let's go back to this chart here. All right, so this is, let me take a photo here. All right, so I'm gonna move up to the weekly. We were looking at the daily earlier. Right, we traded into the daily breaker here. And now, if we look at the weekly fair value gap, you can see we tap right into it. The weekly fair value gap starts at 19,525. And so far, we've made a low of 505. So we are 20 handles into the weekly. Tap right into there. So anywhere in, I mean, it's a large range though, but somewhere in here is where we expect price to turn around. So going into this week, the first milestone I thought we would reach would be trading into this weekly fair value gap. And we do have a daily one that's a little bit lower. But yeah, the weekly one, this was my first target where I thought we would go first. Any time after that, I feel like we can turn around and resume being bullish again. But I felt like we did want this area. So it's good to see us trade into it. Again, completely missed that as well. Oh man, I'm off my game today. Right, here's the 1 minute. Let's see if this is the turnaround. All right, so the reason why I'm thinking that we might turn bullish now is because of here. If you look at our comparison chart, we are getting that big push lower on the dollar. Now we did have a bullish fair value gap here, so we want to make sure price can push through that. But we are getting a nice bearish candle from the dollar during this hour. Remember, I said we'll wait till we get to the end of the hour, and hopefully we are seeing bearish momentum. It looks like we are getting that. Also, if we look at the indices, we can see that while Nasdaq is the weakest of the three, we can see the Dow is very bullish. So it's showing that it is having an inverse relationship with the dollar. We're getting S&P while it's pushing lower, it's still holding market structure, so it's not showing that it's heavily bearish. And so I'm hopeful that the Nasdaq can turn around and then we can get all three in sync and they can all push bullish while the dollar push bearish at the same time. Still a little ways to go towards confirming that, but we are looking, we are pushing in that direction, it looks like. Okay. I'm hoping price gives another trade back into the breaker like we got on this one. It traded right to the edge of the breaker and then off it went. See, this is about a 10 handle breaker, which is not too shabby, not too bad when you're looking at the risk reward there. If I was going to take that, I would do a 1-to-1 here. So this would probably be a 15-point stop. And I would go up for 15 on the first and maybe 25 on the second. So 580. Yeah. 590. So yeah, it already delivered. what I would have asked the trade to deliver to. So now that we're in the macro, let's see if we get another entry back in here. But if not, we already got the first entry during the macro. So we can look and see if price wants to push higher. If price wants to push higher, then we have to step back and look at structure and see where we are. And I noticed this earlier when I saw this candle and then I saw this candle. We were down here. First thing I thought about was, let's see if we get a short-term high and then a push above that to where we start to see maybe a market maker model right in this area. So not that we need to run all these highs, but maybe we just run up to here, back to like the midnight open per se, and then maybe continue lower. But prior to that, I was thinking maybe we would push higher. But we'll see. Because why are you saying the H4 is bullish now? If now we get a retracement back down to here, if not, then maybe we'll have to wait until it gets here before the retracement, but then it's a long way down. Yeah, because a liquidity sweep does not change. It does not change market structure to the other side. To be bullish, we need to take a swing high that is protected. Then that will flip us back bullish. If we start moving higher, but market structure hasn't been changed, then that's just a retracement, but not necessarily a change in structure. But here on the 1 minute, we did change structure. When we created the breaker, taking out this high, closing above, we changed market structure on the 1 minute to bullish. Right here at 565. And we did it during the macro, and we did it with speed and conviction. Yeah, that could be. That could be Vikas. It could be. But wait for a price to confirm that instead of calling it out as something that happened because we got a sweep. But you are right in looking for price to react at that level because it did sweep a level of liquidity. So you are looking for a reaction, whether bullish or bearish. You are looking for price to react in that area. And that's what we saw. We did see a reaction here. And here on the super low time frame of 1 minute, we saw a market structure shift and a push higher of roughly 50 handles past the market structure shift, or about 100 handles from the swing low here. It was our macro. So during this macro, we had a market structure shift on the 1 minute. We also, as soon as that happened, we had a retracement back into the breaker by a tick or two. And then we had a push higher of a little bit less than 50 handles, so about 43 or 4 handles. See if we get a trade back down into this range on this 1 minute breaker here. If we can get that, then this becomes our short-term high that we want to see an impulse above, pushing higher, leaving a fair value gap behind as it goes to attack 19,650. So if I had a crystal ball, that's what I would have price do right now. So let's see what happens. Yeah, so because this breaker, this 1 minute right here, the entry actually is what created the fair value gap. Right, so the fair value gap is created right here, but the entry is this candle at 1053. We traded above it and closed. The next candle traded back to it. That's where the entry should have been, and then take the price, take it higher. And so it leaves the fair value gap behind to support price. So you don't necessarily have to wait for the fair value gap to take the entry. Most of the time, you'll see it created inside of the fair value, inside of the breaker. In this case, I think it's difficult because the breaker is only 10 handles, right? So it's a little difficult to find that kind of gap to make the fair value gap there. It did make it here, but of course, that was the entry. So we have to wait for price to come back. Now, through my back testing, I found that price likes to go 25, 30 handles and then come back. So far, we're already up to 45, 50 handles. So we'll see if it retraces back, but I believe it will because it generally does. So you just have to be patient. Hey, Slam, what's up? Ooh, no problem, Vikas. No problem. If anyone else has any questions, comments, make sure you throw them in the chat. Don't think I'll make it all the way till noon today. So I just want to make sure that anyone who has any questions, we go ahead and touch that. All right, Vikas, we'll catch you later. Maybe this afternoon or tomorrow. I see. Yeah, we do have these equal highs up here. 651, take out that second level, and then maybe we'll get a retracement back down the breaker here. And likely just based on time, pay attention to the next macro to see if that's when it happens. Okay, still here. little bit past half past the hour here, and I can see that although last hour we did have a sizable push lower on the dollar, we're now rebounding and it's going to retest that fair value gap again. So we are getting a bullish candle this hour, which is likely why we stopped being bullish here on Nasdaq. So we'll see if we get another rejection from the dollar as we close out this hour heading into lunch, and if we do, um, then we should see a bounce out of this area, and then we'll start seeing some of these higher levels taken, whether it's the 651 level, the 694 level, or retest back into this bearish fair value gap that was created around 8 o'clock this morning. First things first, though, we need to hold the breaker block position down at 560, 19,560. We need to create support there and hold price. Finally, we got Nasdaq is the only one that's bullish for the hour so far. Still another 17 minutes before we close out this hour and head into lunch. Let me just look at what retracement we have on the Dow, since the Dow was out in front leading for most of the morning. Okay, so we got about an 83% retracement on the daily range so far. $83 retracement down to a bullish fair value gap. Yeah, let's quickly jump on that. All right, so this is the dollar. I was saying, it's even though we had last hour push lower, we're now seeing it trade higher again, going to retest that fair value gap once again. So we'll see how it responds once it gets up here. But the Dow, remember, the Dow has been leading all morning. Now we finally, in the last 2 hours, we've gotten some retracement here. And as I just mentioned, we're at 83.5% from the daily range. Right, so drop down right in 83.5%. But also it's a bullish fair value gap on the hourly right there where it stopped. So we'll see if that pushes price higher. And next up is the S&P. It's still showing bearish at the moment, even though it did tap into a bullish hourly fair value gap. It's really, really small, but it tapped in. So far it's holding price, but we got another 15 minutes to see if that actually does hold or if it's fool's gold there. No fair value gap to mention on Nasdaq on NQ. However, we are showing for this hour at least, it is the strongest of the three. It was showing bullish up until just a moment ago. So we'll see how the rest of the hour trades. I did mention that potentially in 5 minutes when we start the next macro that we could see a retracement back into that breaker block that we formed during the last macro. We could see a return there this macro as well. So we will have our eyes peeled for that one. I think it's at 565 was the level. We'll see. Yep, there it is. 565 is the level. And we have the macro coming in just 5 minutes. So if we do get a retracement, that's the level I'm looking for. And that's the time slot I'm looking for it to occur. I do appreciate the likes, everyone. So everyone who's liked the video, thank you very much for your support. If you are new, make sure you click the subscribe button. It'll give you access to the chat. And the chat is, in my opinion, the most important portion of this live stream here. I think it's great to listen to me and watch what I'm doing on my chart, but the chat gives you access to all the other members as well to ask questions and to learn from them. There are several subscribers in the room who are more successful than myself, as well as have been trading for much longer. So it's a lot of value to be gained here, more than just me. Hey, Ray, what's up? Good morning. Speaking of which, there's one right there. One of our subscribers who has a great deal of experience as well as success in day trading. Right, there we go. Tap in right there. Still another 3 minutes before we get into the macro. minute. Sorry, let's take it down to the minute just so we can see more details. Right. That is crazy how that already happened. Came and delivered 35 handles already. Now we're into the macro and it's already gave what it needed to give. Let's see if it now pushes lower once again. We have a wick here that needs to be balanced. We also have a bit more of the breaker if it wants to trade into it. Yep. Okay, Dorsey. Yep. It's macros, man. Like I said, when you find something in all of the tutorials you watch or all the mentors that you follow, and you find something that speaks to you, just focus on those things because you can be successful at all the different setups that you see. But you do have to be selective. Just choose a couple that you love, learn those, and get paid. Macro is just the time period. So the macro is the time period, and during that time period, there's a set of instructions um, for moving to a certain level, and that's going to either be a structure change, a structure shift, or you're going to see your setup provide an entry. So in this case, during the last macro, 1050 to 1110, right, we were bearish. We were pushing lower, lower highs, lower low, lower high, lower low. And then suddenly we broke this high. So we put in a higher high finally. So we broke structure. And we broke structure right at 1052. So we were in the macro period. So the set of instructions here during this macro, the 1050 to 1110, was to challenge the protected high of bearish market structure. And so what it did is it flipped over to then being bullish. And then we had bullish market structure since then, only on the 1 minute. It didn't do that on the 5 and 15-minute time frames. But on the 1 minute, we did flip market structures to then look for a 1-minute entry. Traded above here at 1052 when it broke structure. That also confirmed our bullish breaker. The next candle, 1053, traded back in, and then off we went for, let's see, how much was that? About 70 handles. It ran up for about 70 handles before we got a retracement back down, tapped in, delivered 35 immediately, and now we're in a macro and it's back in, providing potentially another entry. Thought it would go a little deeper, and it did so far, but let's see if it trades deeper into the breaker. I'm not sure, but either way, during the macro time, you're either looking for a market structure shift, you're looking for a breaker to be confirmed, or you're looking for a breaker to be traded back into as an entry. And you could have all three, like we had here. We had a market structure shift, a confirmed breaker, and then a trade back in, providing an entry back in 2 minutes. Back-to-back candles gave all three of those scenarios. Usually we look for one, but all three is possible. Yep, sure can. It's right here, right here. All right, so we were trading lower, put in a low. So remember a swing point. If you're looking for a swing point's going to be a low with a higher low on both sides. Yep, so this right here would be a swing low, and then it traded higher than this candle, than this swing point low, traded higher right here. So then this became our protected high, and price traded lower and closed lower. So it continued to push lower. And so then our breaker just became this level, from this swing low to this high. And when it broke lower, then we're just waiting for this high to be taken, because now this is our protected high. We want our protected high to be taken. So that's your breaker right here. This swing low to this swing high. So it's 1034 to 1036 candle. Right. And now that we have that breaker structure, you move up to the 5 minute. And then you could see potentially a market maker model, or this high, this high. Sorry, let me just make it cleaner for you. So this one as level 1, this one level 2, and then ultimately making it up to here. Right. And that's if we make it up there, right? This is the opening range high. So really, you're going to be looking for something around the midnight open, midnight to 8:30 open. You're going to look for price to fail here. Now, if it pushes right through, then perfect. But try to get your exit. If this is a market maker buy model and we start to see price push higher and we take out this high with speed, we take out this high at 651, make a small retracement, and then push higher for 729, then yeah, you're going to want to look for an exit somewhere between the midnight and 8:30 open. And if it continues to push higher, let it go, let price go, but don't take the risk of trying to ride it all the way if it doesn't want to be bullish all the way up, because the opening range low has already been traded below. And so we have a relative good expectation that the opening range high is going to hold. So you're going to want to look for an exit before that. All right, final questions and comments. Make sure you throw it in the chat, whatever you got. Jonathan, you got stopped out. Okay, I see what you're saying. Yeah, that's That definitely happens sometimes. We did get one, and we got the second entry. So these were the ones that, were super easy to get the profits on. And on the next one, it's going to trade lower, and you're going to want to wait for it to come back up and then try to get it when it reconfirms. Hopefully, it's during the same macro period that it trades higher and reconfirms the breaker. Right. Let's keep an eye on this level. It's only invalidated if we go below 505 and close below. If it trades all the way down here, puts a wick, and then comes all the way back up, we still have a valid breaker. But you want to make it reconfirm itself before you jump in. Mm. Oh, you took it here. Okay. Mm. Yeah, the only thing bad about that is you were just, whenever you get this close to the macro, don't be impatient. Just wait for the macro to come, and then wait for it to give you a better entry during that time. That's happened to me multiple times as well, where I took an entry at 47 or something, and then only to watch the macro start and then price move and put me into drawdown. Like if you had this nice setup here and it was like 11:30, then by all means go for it, because you still have 20 minutes before the macro. But just 2 minutes before, I would suggest waiting. All right, everyone. Thank you for being here. Tell you what I'm going to do. I'm going to leave this on while I take my lunch break and allow you guys to continue to converse with one another. If you are willing to trade during the lunch hour, stay online. There will be others here as well. If you see something or you have a comment you want to make, the chat is still available to all of you. I will be back at 1300. So in just 1 hour, I'll see you all for an afternoon session. All right. If you are leaving and you're not going to trade during the lunch hour, make sure that you do click the thumbs up and supported the channel on your way out. And again, if you're new, make sure you're subscribed so you get the all the invitations as well as the reminders, and you have access to the chat. So go ahead and do that. And again, I'm going to leave this on throughout the lunch hour and allow you guys to continue to trade as a community, even though I'm going to take a break. All right. With that, I will see you guys in just a bit. Take care. 20 people. Especially when I go work out during lunch, I'll start leaving the feed on, allow you guys to continue to communicate, continue to trade together while I step out for a quick workout, and then we resume the afternoon session. Right. So I'm just looking to see what happened during our last macro. I know we had a question about macros this morning. I believe it was Kay Dorsey who asked. It was, and we can see that during the previous macro, so 1050 to 1110, we had, let me drop time frames on the 1 minute. We had a bullish breaker form itself. During this macro, 1050, it confirmed at 1052, 1053, had a trade back in, and then it delivered 50 handles, 30, almost 60, about 60 handles it delivered. Came back down, tapped in, delivered another 30. And then we had our next macro start 1150 to 1210. And what did it do? It traded in. Now it did peak a wick or two or three below. I had a entry set up as I was leaving out to put me in at consequent encroachment. So I got in at 560, so a little bit above. And I had my exit set up at, let's see, 560 to 623. So I had my exit set up to get out right before the high here. So I had it at 623. That's 620. So before this high. And we actually ran that high at 634, even though I was out about 10 handles before that. That was a nice, quick and easy, looks like bullish setup there while we're still bearish. We had a nice 1 minute breaker block set up. And I didn't even check to see if it was a unicorn. I know we have the fair value gap below the breaker. Actually, we do. It was a unicorn. Forgot about right there. And then we had the inverse over on this side, on the lower extremity. Wicks into the inverse and then back up. So now we'll see if we continue higher. We still didn't take the 651 level. So I'm looking to see if we take the 651 level back on the 5 minute. It looked like we had a market maker buy model, which we may. But for that to occur, we need the 651 level. And then we also need the 730 level. One thing that's brand new actually is this 1 hour bearish fair value gap. This was not here until 12 o'clock. So in fact, you can see this 1120 candle, the up wick, ended up being that border right there. That's what ended up setting the size of this fair value gap, this bearish fair value gap here. So now we have to contend with this, which wasn't here before when we first started looking at it being a market maker buy model. We didn't have the fair value gap. So now that we have it, we do have the potential of a price to fail here and to seek lower prices. We got in the first 10 minutes. So for basically 1 o'clock until 10 after 1, there was a big 50-point push out of the fair value gap here. I think that's the setup that Ray is talking about that he took. That's one trouble. No more. Appreciate that, Ray. Up the 1120 high, which was over here. So he pushed into the fair value gap, taking out a buy side liquidity. Then he found a 15-second unicorn going the other direction. Right, which allowed him to get in an entry, and then he waited for the 1 minute to confirm. 1 minute confirmed here on the 1253. You swept this low. And then you take more entries when it traded back inside. Right now, Mohammed, right now you're trading in between the range, right? So look at your lunch high here at 642. And then you want to look at your lunch low at 542. So it's a 100-point range here that you're looking at. And we're probably somewhere close to, okay, we just traded a little higher. We were close to where these candle bodies is. That's about equilibrium there. But that's really what you want to look for. So when you get close to buy side liquidity, you want to look at a lower time frame. So if we're on the 5 minute now, you want to drop to the 1 minute, possibly lower if you can. Or if we keep trading lower and we get down here, you want to look and see if we get a bullish setup again on the 1 minute or less. Let's move up time frame just to make sure we're clear on what price is doing. All right, let's take this comparison chart first. All right, so earlier we were looking at the dollar. We saw it push heavily out of the fair value gap, push lower, and this was during the 10 o'clock hour. And then we saw the next hour just before lunch, 11 o'clock, it was buying up the entire time. Thought we would get a retrace back into the fair value gap, another test, and then we would see how price reacted from there. We did get that starting at 12 o'clock. So during the lunch hour, it traded back inside. It did reject and start to push lower. And now we're continuing that into this hour. We're almost at half. half of the hour, almost at 1:30, but we're not quite there yet. But we do want to see continued push lower towards these lows, right? And in doing so, we want to see the indices turn around. We want to see them start to show some sort of bullish setup, whether it's some sort of support or sweeping sell side liquidity. And then we want to see price move in the other direction. So we'll be looking for that as we continue to follow the dollar and make sure the dollar is pushing lower. But in doing so, we do want to see bullish setup start on the indices. If we don't get a continued push lower on the dollar, then we won't look for those bullish setups. One thing we do have that is giving me some optimism is that the Dow is remaining bullish, even though it traded lower. Remember, we looked earlier and we saw it go down to 83.5% retracement from these equal lows. It hit a fair value gap and it was strong during the lunch hour, pushing higher. And now we see a continuation of that. So we want to continue to see that as well. And we want Nasdaq to catch up. But there's still a few things that need to be confirmed before that. So we'll just continue to monitor price, but I just wanted to give you an update on where we were. Yep. Right. So your forward PDA arrays, you say, are, oops, 1 minute breaker, 1 minute combined CIBI. All right, so here's your 1 minute bearish breaker. Essentially a unicorn is the entire size, the entire range. Okay, so the inverse here. Oh, let me put the new week opening gap back up. I did take that down earlier just because I didn't want too much. Oh, new week opening gap from last week, I see. All right. Which is where we are now. Yep, one from this week is up here by the 8:30 open at 780, 19,780. So it's from 629 down to 612. All right, so we are seeing a rejection from the breaker. Yeah, that's Mohammed. I understood why you were asking. Yeah, if you want to use a breaker for a second go around after it's already delivered what it was supposed to deliver, then you just look for it to set up again on another time frame, preferably lower than the original. Because in the original time frame, a lot of times what you're going to get is just a trade into it and then just a rejection. You won't get a setup. But another way to give yourself some confidence, Muhammad, is to identify your drawing liquidity. And if you haven't reached it yet, then you have a little bit of confidence that the same setup is going to deliver again. So, so that's another thing that you get to do. And you got to figure out where you think price is ultimately trying to go. And liquidity is always what you're looking for. So if you look up a little bit to where Ray was explaining why he took the setup he took, then you'll see that he had a target in mind as to where price was going. And so if your target hasn't been hit, then you have a pretty good chance that your setup will play again. Yep, we just had the setup trade from 616 down to 591. So yep, there was another 25 handles there. All right, so the dollar has recovered and is now close to its opening price for the hour. So it's showing slightly bullish at the moment, but it's no longer pushing lower as it was before. And for that reason, we're going to um, remain bearish for price action. See if price wants to push lower from here. Let's get back to the minute. Nope, I'm not in this setup. I'm not in this one. right, there was a sweep of the lunch low there. Well, it looks like, nope, sorry. Lunch low is way down here. This was the low of this hour. Nope, lunch low is down at 541. Just traded back to the trend line that I had drawn before. Yeah, I usually will put something up. Yeah, if I'm looking at a setup, I will put the risk reward up. It didn't trade exactly back into this 30-second, which I would have hoped it wanted to, but it didn't. Oops. Yep. But Triple C, yeah, if something comes up soon, I will let you know. To the 12-16 gap. Oh, I see. Okay. All right, there's a trend line being broken. Let's see if it's sustained. Okay. Yeah, so we got a AM session low at 505. Right, so this is sustained. We'll go ahead and get rid of this trend line. Now that we know it's been broken, we're back into the bullish breaker from 11 o'clock and from 12 o'clock. See if the lunch low at 541 is taken next. Man. Well, let's measure that up, Ray. You know how it takes off after the 50%. 592. Hmm. Looking good, looking good. All right, we see price had just stopped now on consequent encroachment of the 1 minute breaker. So far, I do not see a setup where price is turning around with a breaker. Let's see if we get a break lower and then a push higher. Then maybe we'll have a breaker set up. But right now, nothing's set up yet. Good job, Luke. Glad you're. Took me a while to understand what SIP was, but I'm assuming it's stop in profit. So congrats on that. Excuse me. That lunch low. Right there it is. Lunch low now swept. So we have that pool liquidity taken. And now we see what price wants, how it wants to react to this area, whether it wants to, now that liquidity's been taken, turn around, or if it just wants to carry on. All right, we still have 3 minutes left on the 5-minute candle, so it looks like carrying on is what it might want to do. And if so, if we take this protected low, then on the 1 minute, we're back bearish, would then put us bearish on all time frames, all the way up to 4 hour, I believe. A few seconds here. Let's drop down to the minute. Oh, I deleted that. I remember having this fair value gap up on the screen at one point. We have all three indices now in bearish position for the hour, and we have a bullish candle on the dollar. So we do have our indices in sync now. Last impulse leg, these two candles, 35, 36, and now we're consolidating a bit. So we may fill in some of this range, but I would expect prices to go a bit lower from here. Back while we're waiting for that, let's take a peek back into our daily or our weekly actually. Remember, I like us to trade into the weekly busy, which we did 521. We've gotten as low as 505. We also have a daily busy here. And this is a bullish fair value gap down at 446. And of our bullish breaker on the daily, consequent encroachment is 288. So there's several areas down here we could trade into prior to turning around, reversing, and looking bullish again. If we just want to not only get lower prices here, but try to balance out some of this impulse from last week. Right. And another scary area that I've been watching or wondering about is this long wick here that never got traded back into. I'm not saying this is where we're going this week, but I don't like it. This area right here just staying on the chart without being balanced or traded back into at any point. So that leads me to believe that in the coming weeks, we may be revisiting this area, especially as we start feasting our eyes here on all-time highs again. So that's our weekly view, and this would be our daily view. Right, so we ran up into some bearish PD arrays on a higher time frame, bearish breaker, two bearish fair value gaps. We now have a bullish breaker and bullish fair value gaps down here, so price is likely to bounce, especially on a day like today without any high impact news. We took out the short-term highs here from this low range on this one impulse candle at 1402. So now let's see if these lows get swept next. So far, this fair value gap has been relatively strong as far as holding price. You see the candle bodies all staying inside. Okay, there it is. Looking for the lows to be swept once the highs got swept. Yep, let's go ahead and inverse this thing. Let's first see if we get a closure below. And if we get a closure below, then we'll look for a retracement back in and then attack the lows at 506. All right, there's that closure. See if we get a tap inside. There it is. Let's see now if we get a failure. And if we sweep the 506 level. Close below 526. Yeah, we did. Good. Just a moment. Just give me a second. Does it for a macro there. Let's go ahead and set up for the next one. Nothing major happened during this one other than sweeping the low. If we finally get that low taken out here. Long. Right. Good luck, Omar. Quite an impulse on that last candle. Mhm. Layered price range here. Mm. All right, so we've already pushed through this fair value gap. So let's see if that turns into an inverse. The next up is this one, all on 5 minute. Push through here, trade back in here, right at consequent encroachment. Now I push out. So we'll delete this just so our screen doesn't have too much on it, but you can see that it held. Let's see what the next section does. All right, we did not have an invalidation of this 1 minute breaker. So now we'll see if on the 1 minute, if we get a reconfirmation there. And we did. 566. So here's the new unicorn setup, the new fair value gap. Let's get back up to the 5 minute. $10.40 until the lunch high. We had a retracement back to a little south of 88, so probably about 90%. Candle body stayed above 88%. And now we've seen a push back up to equilibrium. Now that price just pushed a little bit into premium, we'll see now if it pushes lower and it wants to continue seeking lower prices, or if we are turning around bullish and we see price continue to push higher. Because here was your equilibrium point. Sometimes it'll trade back up to equilibrium only to gain some more orders and then push for whatever type of sell side liquidity is available. And now we want to see if it's truly going to turn bullish and attack the lunchtime high. If it does, then we're back on track for the 5-minute buy model that we were looking at earlier, where we were looking at 651 as the second level. The first level was, can't remember what the first level was that we traded above. All right, maybe it's the here, right here, 630. Oh, I know what it was. It was confirmation of the breaker. That's what it was. It was at 565. That was the first level. And then we were at 651. And then the next level, 729. Actually, we were hoping to close somewhere in between the midnight open and 8:30 open, somewhere in there. We didn't want to really wait for 8:01. Oh, okay, I know what it was again now. So this was the first level, 651. 729 is the second level. The third level would be 8:01, but we didn't want to wait to get up there. We wanted to close somewhere in here. That's what it was. So we'll see if we get back up to the lunch high. If we can take the lunch high, then we could potentially look at that potential scenario. But as of right now, we got a lot of work to do before we consider ourselves bullish again. 1402. Let me look and see, Muhammad. Yep, good job, Muhammad. That's the one. Mm-hmm. Yep. So, Muhammad, what you see is that entry would have been here on these candles, this set of candles, if you use that 1402 bullish breaker, which sets up right below this bullish breaker, take you right back into it and reconfirmed it. So then you know your entry down here is pretty safe. And now we're just continuing up. Yep. I definitely can see us making it up to this bearish breaker here, but also possibly here as well. So somewhere between 600 and 630, somewhere in there. So this was, looks like this was your silver bullet as well as your 2022 entry. If you follow ICT's 2022 model, then that's right here. So we swept a low here. Then, following sweeping the low, we then can attack the short-term high with an impulse candle, leaving a fair value gap behind. Traded right back into the fair value gap and out. And then Muhammad was diligent enough to notice that we also had a bullish breaker here. The price traded below, traded back above, closed above, traded back in and out. So you see the unicorn setup. Well, sorry, it's more than just a breaker. That fair value gap that it left behind that I said on the 2022 model, it's the same position here for the breaker, so it became a unicorn. So the unicorn setup and the 2022 model are the exact same place for this setup here. All right, Ladarius, there's your, I'm sorry, not Ladarius, El Jefe. El Jefe, there's your move to 604.5. I think we identified this 32nd as the continuation of this bearish breaker. We're looking to see how do you take it the second time because it had already delivered right here. And then it was trading back in a second time. And then I looked for another breaker on a lower time frame, and I found this 30-second. It did not trade back into it. But then here we are trading back into it now at 145. And last time was 115. I'm sorry, not 145. It's 235. And the last time it traded into here was around, and created it was at 130, close to 130. So it took us an hour to get back up here. Now we'll see if this holds and pushes price lower, or if we attack ultimately this one here, which I think was 5 minute, but let me just double check. Nope, 1 minute breaker here. So let me just mark that up. This 5 minute bearish fair value gap is not invalidated. I'm just going to take it off the screen just so we have a cleaner platform here. Congrats, Loot. Yeah, definitely. Let's have another solid day tomorrow to follow up today. All right, this one entry here at 216, this candle, it provided an entry for this 1 minute bullish breaker that we talked about, provided entry for there. It also, the 2022, the impulse up, trade back down into the fair value gap entry. And then also this, since it's 214, this also is the silver bullet. So you can have three completely different types of traders would have took the exact same entry here. $6.10. That entry would have been around 540, 545, somewhere in there. So you're talking about 75 handles by now, or 65. All right, let's move back up to the 5-minute. Okay. All right, I'll just point you before we get to the next macro in 5 minutes. Let's just take one more look here at how all the indices are trading as well as the dollar. And we can see this hour, all three indices are having a big bullish candle. Looks like they're going to overtake the previous hour's candle. But we also have a heavily bullish candle on the dollar, right? And it's just now meeting up to that 1 hour fair value gap again, the bearish one. And you can see how big that area is. So let's see how far the dollar wants to push higher and then whether we get a rejection. If we don't, and it just continues to push higher for the next, I mean, we're already at 2:45, so we got like an hour and 15 minutes really of solid trading remaining today. So really need to pay attention to see how the dollar trades now that it's reached the fair value gap again. Um, and then we'll see how the indices, all three, react to it. Because we're also getting close to the lunch high, which will be a pool of liquidity for us as well. So we're all looking at buy side liquidity now, and we'll see what the response is there. I do like how S&P and the Dow have bounced out of bullish fair value gaps below them, but we don't have that in Nasdaq. So NQ didn't bounce off of anything. Price just turned around without sweeping the low. Yep, you're right about that, Lute. I do love the chat window we have here, so I encourage everyone to utilize it. There's plenty of people here who are willing to help you, and don't worry about being wrong. Just ask questions and be good to go. And we just tapped into the 1 minute breaker here. I would be careful as it is now 2:47. So in 2 more minutes, we will have the macro. So if you're looking for an entry soon, at least in this bearish breaker here, I would give it a couple minutes just to see how it trades and wait for the macro to begin. I'm going to run and grab something to drink. I'll be right back. Right, so we've hit the 78% retracement mark. So the optimal trade entry area is right here for anyone who trades OTE. $30. Mm, let's go to the 1 minute. I'm assuming you're asking about the 1 minute. Mm. You said the 130, so I'm assuming you're asking about a bullish breaker here. Let's see, let's see that. Mm. Liban Ali. The 130 could be, yeah, it could be a bullish breaker. It's just high in the range for a bullish breaker. So it's one of those things that if you use this as a breaker, right, you realize that a lot of the range has already occurred, because if this is the bullish breaker, the manipulation zone is huge. So you can use this when you can, but just make sure you understand that this is probably maybe the last expansion leg. So if you see price push through here, then you want to look for a place to get out of. I'm not sure it's going to continue to run. Um, so if you're looking for a nice range, a big range, then you want to find a bullish breaker. You want to find it somewhere lower in the range. This is pretty high in the range to find a bullish breaker. Uh, but if you're looking for somewhere between 20 and 30 points, then yeah, this is fine. You can take it from here. Yeah, Luke, let me check and see the higher time frames and see where we're looking as far as whether it's going to be bearish or continue bearish. All right, so on the 4 hour, we are now creating a bearish fair value gap, which will confirm itself in the next 45 seconds. And then my guess is we'll have another push up in the next hour to tap into that fair value gap. And then we'll see what the response is, whether it continues higher and violates it or whether it rejects and pushes lower. But it's right here. I'll show you super quickly where we are. So here's the 4 hour. It's right here. Oops, I'm sorry. No, we got 2 more hours. It's not going to confirm now. I don't know what I was thinking. I was completely off there. My mistake, everyone. But it is shaping up a fair value gap here. So we'll see what size it wants to make or whether it invalidates it. There's also one up here as well. Then down on the hourly, you can see the larger fair value gap above and then all the smaller ones. All right. So as far as price structure is concerned, flipping back bullish, it needs to reach 651. Oddly enough, that's our next area, our next level. If it was going to follow the market maker buy model. So we need to take out the lunch high and reach 651 if we're going to flip bullish on the 5 minute. Let's see what the 15 minute is. Okay, the 15 minute needs even more than that. So let's go to 3 minutes. Same as the 5 minute. Obviously, the 1 minute has already flipped bullish. All right, so we have a bullish 1 minute, and the 3 minute and 5 minute needs to reach 651 in order to turn bullish as far as market structure is concerned. And we have a bearish bearish breaker in front of us, unicorn setup, and above that, more bearish structure. But that's what we have heading into now. It's 3:02, so we're in power hour now. We have our final hour of trading. We'll look to see if price wants to take out that lunch high or not. One more time, the comparison chart here. We can see at the very end, we got a rejection on the dollar out of the fair value gap. We got a rejection to about half of its range before the close. And then so far the open, we're pushing a little bit lower now. I know it's too early to tell. So the first 3 minutes of an hour candle doesn't really matter that much. But I did want to see a rejection out of this zone. And so far we're looking that way. 623. All right, it's about 80 handles from that breaker we identified earlier, the lower one down here, which was also the 2022 model, which was also the silver bullet of this afternoon. All right, so we have consequent encroachment of the unicorn setup right at 624.5. And that's where we wick to, and now we're pushing lower. This breaker up here, the 1 minute. Sure, Hattie. So it's coming from over in this section here during lunchtime when it put in a high. It traded into the 1 hour fair value gap, this large pink area. Right, so we were looking for some reaction there, a bearish reaction, and we got it. We got the big push down at 1252, which was inside of a macro period, which is good. That's what we want to see. And so we looked for before that, before liquidity was taken, which was essentially these equal highs here, equal highs from 1230 and high from 1239. Before that was taken, we're looking at the low that sent price higher, right? And that's this series of candles, 39 and 40, 1239 and 40. Price is higher, so now we wait for price to trade lower and close on the 1 minute. So we got that here, 1253. In addition to that, we got two fair value gaps. We got one here. Oops. Okay, so we got those two fair value gaps along with a confirmed breaker at this 1253 candle. And then we got to trade back into the range. And you want to take a short from there and start looking for lower prices. It also traded back into range again at 1325 and then lower. So what happened was, because of these two fair value gaps are back-to-back candles, I have learned from one of the subscribers here that it's a good idea to combine them into one larger fair value gap. And that fair value gap just so happened to have the same consequent encroachment as the breaker itself. And so this becomes your bearish unicorn setup coming from lunch. It was confirmed during a macro period, traded back into during the macro as well. So anywhere from 1255, You had all the way until 107 to enter. So it gave you 12, 13 minutes to get in. Came and delivered 30 or 40 points. Came back up one more time at 13.25. This is not during a macro, so this would have been a entry outside the macro period. But that was ultimately the entry that sent price much lower, down from about 617 until around 512. So we got over 100 handles that way on the second entry if you'd have got in around 130, or if you held that first entry. So that was the unicorn setup on the 1 minute bearish, right around 1 o'clock, right when the afternoon session started. And you see we're back in there now here at 3 o'clock. 3 p.m. candle. Oh, it could be. Yeah. I think if I'm looking at it correctly. Yep. Yep. So this 3 p.m. candle could have been the candle that let you know this was possibly going to be a continuation. So you would have been looking, you would have found this one and said, okay, that's going to be my new breaker. Right. But remember, you finding breakers is the first step towards looking for the setup. But prior to that, you do want to make sure that you feel like the previous direction, especially if you're looking for price to change direction, the previous direction has taken liquidity that it was looking for. So if you're expecting it to push price lower now, then you want to make sure that whatever the buy side liquidity was has been taken. And so we did take this one. However, we do have other points up here. So you want to make sure that you don't feel like those were the points of liquidity that it wanted. Otherwise, you're going to get into a short here and you're going to see price trade higher. But yeah, creating this bearish breaker here is a good sign. And not only is it a good sign, but it was confirmed during the macro at 306. We had this 306 candle here, and now we're trading back inside now. So now let's look and see if we ended up with a unicorn. And it looks like we do. Yep. So in this case, you'd be looking at this. Probably something like that. You could take your first TP at this low, 591. They'll give you like 15 handles. If you want more than that, then you can continue. And you can look for the swing over here around 570. right? But that's a risk reward of 1 to 3, which is pretty stellar. Let's see, where's 25 handles? I'll set this at 25. C-hole, C-hole. The big things you want to look for is you want to look for higher time frame fair value gaps and order blocks. You also want to look for session highs and lows, whether it be lunch high and low, whether it be the opening range high and low, London, New York, Asia. Those are your session highs and lows you want to look for. So you want to look for those liquidity points to be traded to. And when they're traded to, then you look to see if price wants to react in that point and create a fair value gap in that area. And if it does, and you find support for that price range, then you look to take the setup as opposed to just looking for a setup. Now, I also like to put in time. So I like for the macro to support one of those setups. Either have the macro confirm the setup is a good setup, meaning trade past it and close with a body, or I like for it to already be confirmed, and during the macro, I like for it to trade back in and provide the entry. Now, sometimes what happens is during the macro, it reaches one of those session highs or lows. And so in that case, if the macro is reaching a session high or low, then you want to see that impulse go in the opposite direction. So essentially a market structure shift. All right, Hattie, look at your setup. And let's see if we get a big push lower and deliver the 25 handles on this setup. Okay. All right, Ron. Yeah, the big times of reversal that I've noticed are tend seems to come at a half-hour increments. So the times that I've seen that I like to use are 10:30, 1:30, and 2:30. Obviously, you can get a turtle soup at the opening bell, so 9:30 could work as well. Six oh eight. Two handles short of 25. Come on, turn around and give us those extra. Give us those two handles. Like it doesn't want to deliver 25 handles here. Guess we're gonna have to live with only having 22. All right, let's see if this first little leg here was kind of a calm before the storm, and now it's going to actually deliver this go around. Okay, Ron, so you added an extra 5 minutes before and 5 minutes after to make it a 30-minute segment instead of 20. Okay. It's valid until it's invalidated. So until, right? So I like to look and see where the breaker was formed, and then the manipulation leg, which is the leg up that took out liquidity. So here we go, right here. This orange area, we're gonna make it orange. So price is traded above the orange area, which also is consequent encroachment of the breaker above. So price trades above and closes. The breaker we're using now is still valid. So you can lose your trade. Like if you have a stop loss right here at 617, or I have it set up to go at 620, price can trade above and you can lose your trade, and the breaker setup can still be valid. So keep that in mind. It does happen. And so that's why when you back test, you want to look at all the breaker setups, and you want to look at how you normally trade them to see if the stop loss that you would have used would have held. And if you find that your stop loss is too tight and most of your trades would have failed, then you either need to increase your stop loss so you stay in the trade longer, or if you can't do that, then you just take your entry, and instead of getting in at the very edge there, you just take your entry and say, all right, well, I can't accept the risk of a full trade, so I can only get in at consequent encroachment, so I have to wait. And in this case, you would not have got, let's see, I take that back. You would have gotten in. Yeah, you would have got in right here at the 3:15:12 candle. It traded right up to consequent encroachment of, oh, I'm sorry, that's consequent encroachment of the manipulation leg. Sorry about that. Consequent encroachment of the breaker. Yeah, it traded right into a 15:12. You would have got in at 6:12 as opposed to getting in at 6:08. So that'll save you 4 handles and would allow you to have a different type of trade. But there. But that's what you want to do. I like to look at the manipulation leg, go in the opposite direction of the breaker, and until price exceeds that swing point and close on the other side, you still have a valid trade. Now, if price does trade up here and it stops us out, then what you want to do is you want to watch it come back down, and you want to watch it reconfirm. So trade below again, put candle body close, trade back inside, and then take your trade for a second time and see if it wins at that point. Yep. Ideally, if you want to stay in the trade, you want to put it up here at 624. If you believe in this breaker right here, you want to put your stop loss above 624. But then entering at 608 may not be ideal for you. It just depends on what your risk tolerance is. And that's why I say if your risk tolerance is not enough to put it up there, then you want to raise your entry and take your entry up here in the center somewhere. All right, let's see if we get it this go around. Got about a minute and we'll be at 3:30. I mean, this breaker we're looking at right here is relatively tame. Most breakers are larger than that. So you do run into the issue of most of the time you can't even put your stop above the breaker without it being 40 handles, much less being able to put it above the manipulation leg. So in those cases, you just got to accept that I might lose this trade. And if I do, then I wait for it to come back, reconfirm, and then I'm in the second time. All right, we now have equal lows. Let's see if we get to 583. We need about another three handles, I believe, 3.5. There it is. Had a good call out, good setup. You see that you had to be patient. Like it was a good setup and you were in green, but it came back on you all the way back to origin. So you gotta, so when you're back testing, make sure you check that out so you don't get scared out of your trade when it returns back to origin. Right, we'll get rid of this trend line. Where did it make it back to? All right, if you remember this line right here at 574, that was our equilibrium when we were looking at the range. Right, so when we took this, so the lunchtime range, I believe it was the lunchtime range. 12:45 down to 2 o'clock. No, that's not it. There we go. 10:40 up to the high of lunch, 12:45. The retracement, we had a full retracement of like 80%, but the midpoint was right there. That. So we traded down the discount, push higher back to the bearish breaker. We just traded back down and we just tapped discount again. So let's see if we push higher again. Ultimately, how much did we get out of this? 34.75, so almost 35 handles here. Allowed to move stop loss? Yeah, sure. You can move your stop loss. You can move it to break even once you're, like what I'll do sometimes is once I'm up like 15 handles or so, yeah, I'll move my stop to break even if I'm not comfortable with the setup. I mean, if I'm really comfortable with the setup, then I won't touch the stop loss. I'll just let it go. But again, my TP is not as far away as some of yours, and so reaching my TP is not as, it doesn't take as long and not as difficult. But if I'm going in with multiple contracts and I want to close one contract at 15 handles, then I'll move my stop to break even. So if that second contract comes back on me to origin, then I just have the profit from the first contract that TP. Yeah, you just have to understand that moving your stop loss comes with a risk of it returning back to origin. You don't lose any money, but you're out of the trade. And then if you get back in, most of the time, my experience, I'm rarely able to get back in with the same entry or better entry. I usually get in with a worse entry. So that's something you want to be aware of if you're looking at it that way. Right, we got about another 35 minutes or so. If you guys could do me a huge favor, ladies and gents, hit the thumbs up button. If you haven't done so already, if you could just click that for me, let YouTube know that you're enjoying the content. That would do quite a bit towards supporting the channel. So thank you for that. All right, how do you see you tomorrow? Good call out again. Way to end on a high note. All right, so here are, let's see, 1, 2, 3, 4, 5, 6. 6 entries that could have been made between the time of 2:15 and 2:25. So at 10 minutes, they gave 6 entries of different entries, different areas, different levels. So we have 2 breakers. So there's going to be 2 different breaker block entries. We have with these fair value gaps inside. So there's 2 separate unicorn entries. If you wanted to wait till price retraced into the fair value gap. We also had the 2022 mentorship model where we had a sweep of liquidity here, price pushed lower, and then we had an impulse above, leaving the fair value gap. So our unicorn is also the 2022 mentorship entry. And what else do we have? Yeah, the silver bullet. So we have fair value gap. We're in the 2 o'clock hour, trade back in. We had, this would have been our low hanging fruit. So that would have been your exit. 573. Now I think that's a pretty good way. 543. So there's a 30 handle. I think the silver bullet's only supposed to get 10 to 15, but there's a 30 handle potential, and you could have easily gotten 10 to 15 out of that. And yeah, I think that's it. Looks like we're getting back down to this breaker block entry. I like how the unicorn entry is that consequent encroachment of this larger breaker. Mark, this about 3.5 years almost. But I would say I'm closing in on 3 years of like seriously trading. Everything before that was, you're trying to fumble around and find your way and figure out how to get started and who to follow and what's the first thing to look for. And like it took me about 6 months just really to get my footing, but then about 3 years of consistently watching the market every day, practicing trading. I hope this illustration right here gives you some comfort that just because someone else says they're already in a trade, you don't have to feel like you missed something. Or just because you see one impulse candle doesn't mean that you missed an entry somewhere and you should have gotten in. Because as you can see, depending on how you like to trade, your entry would have been at different places and at different times. But you all would have found some sort of footing and support in this area within a 10-minute period, 215 to 225, and then you would have been making your way up to this bearish breaker that sent price lower during lunch. All right, now let's take this and oops. All right, so now we've made it down to to equilibrium here on the price leg. So the price leg that we were just discussing, the bullish leg that ran up to the bearish breaker, it's now retracing back down, and we have reached equilibrium point to where we've traded down the discount. Price can go higher if it wants to from here, or we can continue lower. Keep in mind, we do have this bearish breaker right here, and we have the macro coming in about 6 or 7 minutes. So we'll be ready for that as well. I usually wait for the higher time frame PD array first. That's usually what I'm looking for. But one thing I also do, Robin, is when I start the session, the one thing I'm looking for is where are the previous breakers prior to now, and that price came from. So I can always see where price came from, and therefore, if we get back there, I can look and see if that same area is going to hold again. But no, not every breaker that I place on the screen is one that I'm taking an entry from. I'm not that type of trader. I won't make a trade every 30 minutes. It's just, it doesn't work for me. I just want to make sure that all of you are able to see what's on the screen and what other people are talking about, and you can decide for yourself whether that setup looks good for you. Consequent encroachment. Yes. Mark, consequent encroachment is just a term, same as equilibrium. It's just 50%. So for all the boxes that you see that I draw, I always refer to this middle dash line as consequent encroachment. But yeah, it's just 50%. And then when it's a Fibonacci measurement, I always refer to it as equilibrium, but it's all the same. All right, we're back at the breaker entry. We have now tapped back inside. We look and see if there are any price points here that didn't get balanced that price may want to return to. All right, so we got one here. Let's stretch this across. All right, I think that might be it. Quickly take a look at how the other indices are trading before we get into our final 20 minutes. We got about 25 minutes left in our session today. And so we can see here on the dollar, it has rebounded nicely. So early on, remember it was pushing lower and I said, let's not jump the gun. It's still early in the hour. Let's see how it's trading at the end. And it looks like it wants that fair value gap again. Not only does it want it, but since we're now looking at 1, 2, 3, 4, this could be the 5th hour today that it trades back to the fair value gap. At some point in time, it's probably going to want more surface area. It's not going to want to just tap the edge and then retrace back down. It's going to want to get in there a little bit. So that might be now. Looking at the indices. So S&P and Nasdaq look to be connected, you know, relatively well. They both traded into bearish fair value gaps during lunch, and I have been trading below ever since. However, on the Dow does not have that bearish fair value gap, and it is trading slightly different right now. I appreciate it, Amar. But Robin, one thing I am noticing that when these breakers form, they generally always give you somewhere between 20 and 30 handles, even if they flip around and go the other way afterwards. So if you're able to get in on that first pass, you should be able to pull 20 handles out of the market relatively easily. Okay, 2 minutes before the macro. And off the macro, the first second, it jumped from 560 to 572. Not sure if anyone took that entry, but if you did, congrats. Looks like you already got 15 handles. The new macro. All right, Brian. I know you've been in the room several times. When you say new macro, you mean like a macro that we haven't talked about before, or are you just talking about the macro that just started here at 350, 350 to 410? Mm. Well, the macro is just the way ICT explained it is that it's a set of instructions that during that time period between the last 10 minutes of an hour and the first 10 minutes of the following hour, price is going to run to a point of liquidity. And that's either going to be a PD array of some kind, or you're going to see a shift in market structure. You're going to see one of those two things happen. So you could see a lunch high or low taken, a New York or any type of session high or low. You could, like I mentioned, you could have a shift in market structure, or you could have what we have most of the time on these breakers. We either have a confirmation of the breaker, meaning a trade above and a closure, or we have the trade back inside for the entry during the macro period. So during these 20 minutes, you're just looking for things to happen. Whereas before, um, I'm not saying that those same things wouldn't happen. It's just higher probability during the macro period. So ICT taught us to take trades during that time. And there are several other traders who do it as well, but I've been following these macro times on a daily basis for I don't know how long now, and they seem to be working out really well. You can see here, 350, as soon as 350 hit, we were inside the breaker, price pushed out of it. So if you had your entry already when price traded back in, or you were waiting to take your entry, as soon as time hit 350, you could have entered because you were inside the macro time and you were inside of a breaker. So it retraced back in for an entry. And as you can see from the level of 565, we've already traded to 600. So it's already 35 handles in. The last macro of 250 to 310, I don't think that delivered much at all. But we did get quite a bit here on this macro, the 150 to 210. If we had liquidity swept during that time. I think that was. And obviously this morning as well. But yeah, go back through the charts, look at just those 20-minute time frames, the last 10 minutes and the first 10 minutes of the next hour, and you'll start to see those things happen. This is the closing macro now. Yes, 350 to 410. This is it. All right, Luke. We'll catch you tomorrow. Thanks for everything again. I appreciate you. right, trading into the fair value gap here. This looks like another 2022 model entry. Let's see how would that structure itself. So 15. So yeah, we need this high to be taken. 1 to 2, you want 30 handles. All right, we got a optimal trade entry. All right, let's see if price wants to turn around here or if it's going to push lower. So we can get rid of optimal trade entry. It looks like this setup's not going to work. Survived by about 1 handle, it looks like. 2 ticks so far. It survived by 2 ticks. Oh, sorry. Mark, I start the YouTube sessions in the morning at 9:15. So we do 9:15 until 12 noon, and then we do noon until, I'm sorry, we do 1 p.m. until 4:10. So 4:10. Sometimes we break it shorter if nothing's really happening, but those are the times I try to go for. All right, Ron, give me a second. Okay, Dorsey, appreciate you reminding everyone what they should do. It's kind of a change in state of delivery. It could be, but it's not exactly the same thing. And look, we survived by 2 ticks, and look at us now. Let's see if we get that 30 handles. Let's see, this candle right here is low, was at 558 flat, and we have a stop loss at 557.5. If you were in this setup earlier, you might as well go ahead and break even your trade now. Robin, I've seen them work as many as like 4 times in a row. Just continue to work. I've seen it work 1 time and fail. Um, so, like I was explaining to one of the guys earlier, one of the things you want to really pay attention to is the draw on liquidity. So if you have not reached where you thought the draw on liquidity was, then you could have relative confidence that that breaker will hold again. Um, that's one of them. If you only get a small range, like 20, 25 handles, a lot of times you can have relative good confidence that you're going to continue pushing in the same direction. If it's already delivered 100 handles or so, that's when you really want to be careful when it returns back to that level. You want to look and see if you get another breaker to be formed on a smaller time frame. That's usually what I try to do if it's already moved well past where I would have taken a TP and well past the liquidity point to see if it's going to work again. I usually look for it to either create the same breaker or another breaker on a smaller time frame, or I like for it to pass through the breaker, fake out, turn around, come back, reconfirm the breaker a second time, and then I'll get in. All right, let's see if it finally delivers here. We are in 4 o'clock now, so we got less than 10 minutes. Make sure that you are aware of that. That was one of the reasons why I was saying go ahead and break even your trade now. So if it comes all the way back, there's not going to be enough time probably to recover and still get to where we're trying to go. Oh, I'm sorry, Ron. I was supposed to be walking you through a breaker setup. All right, so let's go ahead and do that. All right, so we can do this one up here since that would still be in view. All right, so if we're looking at this setup right here, the structure of a breaker, what you want to see is essentially, if you're into order blocks, it's a failed order block. But what you want to see is you want to see price moving with predictable order flow, right? And then you want to see one of these violated. So if this happens, right, if this is how price works, and before, oops, right, so price broke this level right here. So this is what we would consider a bearish breaker. If price trades below this point and closes, this will be a bearish breaker because price was moving that direction. We're low, high, higher low, higher high, higher low, higher high, lower low. So your breaker would be this leg right here. Right? This would be your breaker right there. So we had a high, we had a low, higher high, and then it broke lower and closed. So then this would be a bearish one, and what we would look for is we would look for a retracement back inside, and then we would take price lower, attacking these lows right here. This is what we would expect price to trade to. And so we would look for that entry. That would be our trade. And so essentially that's what we had over here, right? Price was moving up, low, high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. So we had that happen here. So what we want to do, if once price broke lower, we want to look at the last down close candle before the manipulation. The manipulation would be the last leg that went higher that ultimately just sent price lower. So that's this candle right here. I like to pull 2 candles if I can get consecutive candles, but in this case, it's only 1 candle. So the last candle pushing lower before the manipulation. So this one, that would be this candle at 1500. stretch that across, price traded lower, close below. These candle bodies are below. You wait for it to trade back in. You take your entry and you take it expecting these lows over here to be attacked. And so that's kind of how that was worked. All right, so it came all the way back to origin without reaching 2 to 1, which was 30 handles. So it gave you about 20, 72 to 597. It gave 25 handles, so hopefully you were able to pull some profit out of that. But no, it wasn't able to deliver the 30. But yeah, if you're struggling with this this concept here, Ron, have you watched the? Let me send you this link. But yeah, I'll need you to go and watch this. From Ash Trades. Have you watched the playlist that Ash Trades has out on the unicorn setup? Got it. Okay. All right. Here you go, Ron. The whole playlist, there's like 8 videos, but it's 45 minutes in total. So each video is super short, 5, 6, 7 minutes. So you can get through them really quickly, and you can probably watch it twice, you know, in the time that you have to study. But this is definitely a video that you're going to want to pay attention to, or a playlist that you want to pay attention to if you want to learn the setup that we use on this channel, or the setup that I'm using. There are other traders here who are trading different setups, but if you want to do the breaker, there's the one right there. Yeah, so we didn't get an invalid setup, but it's returned back to origin twice. Since we started here, it took off, returned down. We wanted the entry right here at 351. Or I'm sorry, not 351. You wanted 355. But right there is where you wanted to take it. It moved up, but then it came all the way back down, breaking us even there. So it's the end of the day. We'll just pick up tomorrow and look for a different setup. But we're running out of volume now, and we're going to run out of time as well. Especially if you're on a Topstep account, you got to be done by 4:10. That's why we end our daily live streams at 10 after 4. I think Apex allows you to go longer, all the way until 5 o'clock, and there may be some other prop firms that allow you to trade till 5 o'clock, but Topstep cuts you off at 10 after 4. Any final questions or comments? Yeah, El Jefe, I'm with you on the 606.5. I think we just might get there. Let's see if we had any earnings announced today that, no, I don't recognize any of these. The big one to pay attention to is the after close Wednesday, Nvidia. Nvidia has been the hot stock for, you know, the last 6 months to a year. And so we have that on Wednesday. So we'll pay attention to that for sure. Definitely this 350 to 410 macro on Wednesday. Yeah, we need to make sure that we're aware that Nvidia will be announcing. Hey, no problem, El Jefe. All right, I want to thank you all for showing up today. This has been great, and I appreciate your attendance. I appreciate your um, being active in the chat, asking good questions, being a part of everything. Thank you again for the likes, everyone who clicked the like button. I really appreciate that as well. If you're new and you haven't subscribed yet, make sure you do so. You'll get access to the chat. The chat, I'm telling you, that's where the real learning happens. It's good to watch me and listen to me, but the chat and being able to speak to other traders is where the the real hidden gems are. So make sure you're subscribed so you can do that. And with that being said, everyone, we'll do this again tomorrow morning at 9:15. I hope to see you there. I hope you also have a good evening wherever you are in the world. Good evening, good afternoon, all those good things. And I'll talk to you tomorrow morning at 9:15. Take care, everyone.